Dead money don't make money. Your cash should be like little soldiers. Each Benjamin should be going out and bringing back another one or possibly two. And if you're at all like Elridge and I, each of our Benjamins comes back with at least four. In today's video, I'm going to show you how to do exactly that. I'm going to go step by step on how to do your first loan with just $50,000. I'm Anitra Preston, co-founder of Vertical Capital. We lend money to real estate investors and developers in New Orleans and Baton Rouge. We are not brokers. In other words, we are the decision makers and set our own lending criteria. We teach people like you to structure safe and profitable loans. We also teach people how to use finance to increase their wealth fast. If you're interested in learning more, just subscribe, share, and like this video. So you have $50,000 sitting in an account and you don't know what to do with it. But what you do know is you should probably be investing it. But in what? You don't have time for a fix and flip, or it looks a little too much for you. You're not quite ready for a rental property, plus you're not trying to deal with tenants and maintenance. Or perhaps cryptocurrency and stocks are just a little bit too risky for you. So what do? I got an idea, a really good idea. Maybe you should be investing that into private money lending notes. Okay, so I can almost kind of see what you're thinking. You're thinking, but Anitra, what type of borrower only needs $50,000 to invest in real estate? Well, I'm going to say to you, that's an excellent, excellent question. And I think you're thinking the right way. However, there is a better thought, or there is a better way. The thing is, we're not looking for that borrower. In fact, we're not looking for anybody. Who are you looking for? You are looking for a private money lender. You are looking for an experienced lender in your market who is willing to co-lend with you. Now, listen to the key terms: co-lending and experience. The person has to be experienced, and they also have to or they should be familiar with the co-lending strategy. Co-lending is a lending strategy used by a lot of private money and lender investors, myself included. This is when two lenders partner with each other to get a deal funded. So instead of looking for the borrower, you will be looking for a lender who is experienced and active in your market. These folks generally have an established reputation already, and they have a pipeline of borrowers, and they're always willing to accept additional capital. Now, why would another lender be willing to accept additional capital from you? And here's why. It's because the less capital they have in a deal, the lower the risk, right? And so by you coming in with the $50,000, you just brought value by lowering their risk. Your risk is lower too, because you are not funding the entire deal either. I hope this makes sense. With the co-lending model, generally you will have your entity and the other lender's entity on the promissory note and the mortgage. So the borrower is on the hook to you and the other lender. Elridge and I have an established LLC with another lender here in New Orleans, right? And so we lend out of this LLC about 2 or 3 times per year. Now, I'm not suggesting you start off this way. That relationship took years to establish, about 7 to be exact, right? So I do suggest maybe starting off, as I said, and having the 2 separate entities. That might work for you. But if you're comfortable enough and you want to have a joint LLC, that's definitely an option. The experienced lender should also have a lending criteria. Now, as a beginner, you might not have an established criteria and you might not quite know how to do that. This is why I'm suggesting that you partner or co-lend with an experienced lender, right? And so you should be reviewing the criteria. You should be understanding why they're criteria. as a beginning lender, you need to understand why they lend at 65% or 70% LTV. Start with a single family project. Take it slow. Slow and steady wins the race. Start with a single family project in a light to low moderate rehab. I think this is very, very important because you need to understand the process and what goes into a purchase and what goes into a rehab. I also would consider you funding the rehab portion of the deal. I recommend this because you coming in behind the rehab, you have lowered your risk. In addition, more than likely, you would have already received at least one interest payment before releasing any of your money into the deal. Now, if you've been watching this channel long enough, you know that we do not release any of our capital under no circumstances, especially during a rehab. In fact, we reimburse once the work is complete. You need to pay attention to how that lender is evaluating properties. This is where you're going to get a lot of your practical uh, experience or know-how. Again, by partnering with an experienced lender. You want to know how they vet the borrower and how they collect documents that they require from the borrower. You also need to familiarize yourself with the loan document. Understand what that lender is charging for the borrower is also important. This is how you're going to make your money. When Elridge and I co-lend, we just simply come to an agreement here. It all pans out pretty easy. It's nothing complicated. And I hope it's understood that whatever you agree to charge, that is what you get on your $50,000. So if it's 3 points and 3% interest only, you are going to get 3 points on $50,000. Typically, you get this at the loan closing and 13% monthly interest payments on your money. Now, you need to decide also who's going to collect the money and who's going to disperse the money. Generally, the more experienced co-lender will actually do that process for you. But again, you need to do your due diligence when you decide to co-lend with this lender. So the next question is, where do I find these lenders? Excellent questions. Some are title attorneys. In fact, I can name at least 5 attorneys here in New Orleans who do lending as an extension of their business. So I highly suggest you start with title attorneys. I think some of you guys in other areas call them escrow attorneys. You'll find that a lot of these attorneys are lenders, right? And in fact, one of them here has a loan servicing company. You might want to check into that too. Some local servicing companies are tied to attorneys who actually do lending. And if you explain to them, hey, I'm trying to get in and I have these 50,000, I want to try to put it to use on the co-lend, they're going to know exactly what you're talking about. And you should probably go ahead and ask for that introduction, right? And so other areas where you can find, you need to go to your local real estate meetups and your real estate investor associations. They are there. There are private money lenders that are there. Also, ask real estate investors who they use and ask them for the introduction. Tell them that you have 50,000 and you're looking to partner with someone to do a larger loan, perhaps maybe $150,000 loan or another 140,000, and you have 50,000 to lend. You will be so surprised the amount of doors that can open from the real estate meetup and your real estate investor associations, and by simply asking other investors who are willing to point you in the right direction. If you're feeling like this is too much, join our community. The link is in the description. We will show you step by step, along with all the documents that you need to get this done, right? But if you're just looking for a passive way to get those Benjamins working for you, then maybe we should talk. So let's recap. Step number 1, find an experienced lender, right? They're out there. Again, try talking to your local title attorney because they are lenders too. Review, Understand and agree to the terms, cost, and the lending criteria with that co-lender that you choose to partner with. And 3, fund your first $50,000. And it's that simple, guys.